Hello D-traders, I hope you had a wonderful weekend. It's a time to return to work. As usual, we start the day with a recap of the Asian session. We are going to discuss what is going on in markets, which sentiment prevails, and figure out the reasons for the US dollar's rally. Let's start. On February 24, Russia announced a special military operation in Ukraine, which led to the escalation of the conflict. Global markets nosedived following this news. Moreover, speculators are now worried about the risks of nuclear war. On Friday, the S&P 500 index closed with a 0.8% gain. Perhaps an increase occurred amid the market reaction to Friday's macro stats. The US unveiled average household income and expenditures data for January. Household income remained unchanged since December, while expenditures jumped by 2.1%. It was the highest increase since March last year. However, many analysts believe that despite constantly rising inflation due to geopolitical tensions, the Fed is unlikely to raise the key rate by 50 basis points at once in March. The US currency maintains its rally amid risk aversion. During the Asian session, the US dollar index climbed above 97.00. Now it's trading in the range of 97.02 and 97.42. It grew by 0.67% against its main rivals, moving up to 97.05. As a result, it reached the highest level since July 2020. Western allies agreed to exclude some Russian banks from SWIFT. The assets of Russia's central bank will also be frozen, limiting Russia's access to its overseas reserves. Additional sanctions will target tech experts as well as foreign accounts of the Russian largest businessmen. And this is why analysts are betting on further strengthening of the greenback. The US dollar benefited the most from the Russia-Ukraine conflict. However, it lost 1% against the yen. The dollar-yen pair is now trading at 115.49. The quotes are likely to remain between the support level of 114.62 and the resistance level of 115.75. Asian stock market showed growth at today's Asian session following Friday's close in the green zone. The Nikkei index advanced by 0.19%. The dollar-yen pair has also added gains. As for macroeconomic stats, Japan's retail sales increased by 1.6% in January in annual terms, notching a 4-month rise. However, on a monthly basis, retail sales fell by 1.9%. They have been declining for the second month in a row due to the coronavirus pandemic. The S&P ASX 200 also jumped today. Losses in the tech stocks were offset by gains in the commodity market in Australia. The war in Ukraine led to an increase in commodity prices. For the same reason, the Australian dollar fell on Monday as investors dumped risky assets. It has already dropped by about 0.65% against the US dollar. At the same time, the threat of global inflation remains as relevant as ever. According to the Melbourne Institute inflation gauge, consumer prices in Australia climbed by 3.5% against the previous reading of 2.8%. On a monthly basis, they also grew to 0.5% against the previous indicator of 0.4%. Even though the Australian dollar is supported by high commodity prices, our main scenario suggests a decline to the target level of 0.7065 and further to 0.6950. Now the AUD USD is trading at 0.7206. And that's all for now. Keep close tabs on market developments on InstaForex TV channel. Feel free to leave feedback and see you soon.